back to Financial Freedom with Jewel. Today we're going to talk about 4 things you never want to say to a loan originator or a lender prior to you closing on your home loan, your mortgage application. But I'm going to need you to give me one moment. I'll be right back.
I'm a stranger, willing.
Okay, so you made the big decision. You are now going to purchase a home. There are 4 things you never want to say to a lender. You say these things to the lender, automatic red flag, it can possibly derail your entire home buying process. Number 1 thing is you never tell them, I'm going to change my job. You guys, during this process, they're going over everything with a fine-tooth comb. Even if you don't like your job, I'm going to ask you to stay in that job until you close on that home. Oftentimes people decide that, oh, you know what, I don't like this job, I'm going to jump up, I'm going to move. But we're in the middle of a process of going through that with the lender. He's looking for stability, he or she. The minute they sense that you're not a stable person and you say, yeah, I think I'm going to change jobs, immediate red flag. When you go into underwriting, you probably won't even go to underwriting because they're going to red flag it and say, you know what, we are not going to do business with you. Because once again, when it comes to buying a home and a lender, he is looking for a stable buyer that is not, impulsive or just going to run and jump and do things. Because in his mind or her mind, they automatically say, because they're impulsive, just jump up. They're going to just jump up and leave this house. They equate everything to your habits and how you are. So that's the one thing you do not want to say during your loan application process for your home. Number 2 thing is, you know what? I'm going to go ahead and I need to buy me a new car. I need to get a new car. My car is acting up. No, once again, they're going to say, once again, you are going to buy a new car when you're in the process of trying to qualify for a home. Remember, when they're qualifying you, DTI, debt to income, is everything. The minute you make a large purchase or they get wind that you're going to make a large purchase, what they're going to do, they're going to say, you're going to mess up your DTI. So you can actually increase your debt, and that's going to knock you out of possibly even being able to purchase the home. So you want to wait till you're all done with the whole entire process. I get it, you want a new car, but I'm going to encourage you to hold off and wait until the whole entire loan is done. The house is purchased, you have the keys, you've gotten in there, and you are now the owner of the home. I had the same thing happen to me. My car was acting kind of rickety, and I'm like, we need to get a new car. But I had been told by my mother, don't ever do anything in the middle of that process. If you do, it's going to automatically stop the whole process and you will not get the car. Now, I'll tell you what I did was the minute we actually closed on the home, we went out within a week and we purchased a new vehicle. So just hold off, you guys. It's not going to be forever. I know it feels like it, but do not make large purchases. Number 3 thing is, do not tell the lender, I'm just going to go ahead and I'm gonna go and just borrow my loan down payment. No, you don't want to do that, because they have to track every single thing when they're getting down to the final stages of that loan. And if they see large deposits going into your account, that raises suspicion, because they think you went out and you got a loan to cover this down payment, which means you're gonna have to pay us back, you have to pay the loan back, which means you have more financial obligations. Once again, it can totally derail it, and it can put your debt to income ratio way up there. So you want to hold off. If you don't have your down payment, I'm going to suggest that you work and you save for your down payment before you go and you apply for a mortgage loan, because they're going to want to be able to see reserves. But the good thing is that nowadays you have a 401k, you have an IRA, you have things that they can actually visually see. They're not going to require that you would go ahead and use them, but they want to see reserves by saying that, this person's been a really, really good saver. So if you had to pull from that, of course you can if you choose to, but they don't want to see any large gifts amounts coming into your bank account, because remember, they're going to ask you for like 2 months of bank statements. They're going to ask you for about 2 months of paycheck stubs. And before you even close on it, I would say within a week of you closing, maybe even days before you close, they're going to pull your credit again to make sure you haven't had and made any kind of sudden moves. Because what people don't understand is that while you're going through that whole process, whether it takes you a month or 2 months, you're under a fine-tooth comb. They're looking at everything. Any sudden movement, they're going to say, sorry, we're not going to qualify you for the home. So you want to make sure you're squeaky clean. You're not doing anything to your credit. You're not making late payments, because I've known there's been people where they get down to a day before closing They're called by the lender and saying, hey, we can't close on it. You bought a new car. You went ahead and had a large deposit in your account. We can't give account for that large deposit. So therefore, we just can't take the risk. Sorry, maybe next time. They will completely shut it down, you guys. They don't care because they're looking at, although you maybe think I'm getting me a home, they're looking at 30 years of possibly dealing with you. But when we do velocity banking, I teach you to pay off your houses in record time. So we're not talking about a 30-year mortgage. We're talking about a third of that, and in most cases, less than that. But no concerns. I digress. Now, the fourth thing is you do not want to co-sign for anybody, nobody. If your daughter says, Mom and Dad, can you co-sign for me to get a car? Can you co-sign for my student loans? Can you co-sign for, my home or my apartment? No, you don't want to do anything like that because once again, it's showing them that, oh, there's risk. They have more responsibilities. Now, the person may say, hey, listen, I'm going to pay my bills. And this person, they pay their bills. They're not going to hold you to it. But because the bank sees that you are on the line for a cosigner, guess what? They're going to charge that to you. And they're going to say, well, if that person doesn't pay, then you're going to have to pay it. Once again, it affects your debt to income ratio. You do not want to do that. So you cannot co-sign. I'm going to repeat, you do not co-sign for anything while you're under the microscope. Until you close on that loan, do not do anything that's going to hinder you from purchasing your new home. So once again, number one, remember, do not change jobs. Number two is do not have a lump sum payment going into your account and you don't have any kind of documentation. Don't take out a loan to try to get your down payment. Do your down payment prior to even applying for that. Number three thing is, remember, you do not want to make any large purchases at all. The car's gonna have to wait, the boat's gonna have to wait, or whatever. No large purchases at all, period, because they are watching your account and they're watching you like a hawk. So don't do that. And the number four thing is do not co-sign for anyone while you're under that microscope. Like I told you, once you sign on the dotted line, you get the keys, you close on the home, you can go out and buy the new car, you can go ahead and change the job, you can go ahead and take out a loan if you want to for other things, or a line of credit, I say, or you can go ahead and co-sign for somebody. So it's simple. You're just in that holding pattern until you have verification that the home is yours, you own it, you're paying it off. Then you can make all those moves that you didn't want to make when you're under the microscope with the lender. Remember, he's looking out for the bank's best interest and they want stability. The minute they get wind that you are not a stable person, they are running away from you like crazy. So if you follow my 4 tips, you can go ahead, apply for that application. You won't be denied. You'll get it. You're going through and you're moving along and you will become a homeowner. But like I told you, once you get that home, you get that mortgage, I can teach you how to pay down that mortgage in record time using your current income, no second job required. It's simply, as I always say, telling your money where to go so you don't wonder where it went. I am Jewel, your financial freedom friend. I'm here until you win. Until the next video, I'll see you later. Bye-bye.